Hello, this is Ken Tomko with T2 Asset Management doing our monthly review of what's going on in the markets. As always, please don't use these videos for trading purposes. They're for information only. Start with the weekly chart here. The S&P 500 goes back about 6 years. You see the sell-off we had to start 2025 and also this sell-off we had to start 2026. But in the end, the market just keeps going up. All-time highs, once again, as you can see, are just going crazy, going up, but not arguing with it. There's a trend line on the weekly chart going up. It's support back here. If the market were to do a little test backwards, I'd expect that 7,000 might hold there, just to show that. But yeah, I wouldn't be arguing with this market right now. It's certainly in up mode for whatever reason that is. We come down here to daily chart. We see here's the daily trend line we've got there. It's above all our moving averages. Put a little more local support on there, about 7,300. That if we were to get a pullback, we'd expect it to hold in that level. But you can see here why really the 7,000 number would be really important. But again, in an uptrend. So from again, I always say not to argue with the market, and you don't want to be arguing with this one right now. It just keeps going up, and until it gives us some starts telling us it's going the other way, it's nice to be just making money. Come down here to the 2 hour chart, gives us a little more details about last 6 months trading on the S&P 500. You can see the nice trend that we have going up. We had that dip down in March, and then since that, it just rocketed up. And now, it's going a little more choppy, a little more back and forth as markets do, but still nice uptrend holding. Nothing to see here that is giving us any idea that the party's over anytime soon. If we come down here, this see what's going on inside the market a little bit. This is the percentage of the S&P 500 that's in an uptrend. Right now, that's only at 55%. That is one concern. That this is really a handful of stocks that just keep going up. Tech stocks, the Magnificent Seven, that make up a huge part of the S&P 500 now. But that is what's happening, and you can't again really argue with it. It's just a small group of stocks that just keep dragging it higher, but they're monster stocks. Then we have below there the advanced decline line on the New York Stock Exchange. That's been a little flat for the last couple of months, but still upward. It's not telling us time to bail out of anything just yet. Finally, at the bottom, the volatility index, the VIX. This tells us options contracts for people buy protection insurance against their portfolio. We would see that elevated if the market were in a sell off, like you can see here, hit 30 in March as the price action went down there. You're not seeing that get elevated yet, and typically it'll start to be a little higher before that happens. So again, inside the market, not really anything to see that's concerning. If we look here at some of our sectors, this is the ratio of consumer discretionary stocks versus staples. That's rising. That's a good sign. So that's an equal weight version of that. Same with technology over utility stocks. You could see right here, better to be in tech stocks than utilities right now, obviously. And then biotech over healthcare. That's been relatively strong as well. And then finally, hotels versus utilities. And so all these things are telling us that the market is strong. There's nothing really to see here that's concerning yet, other than, I'll get to what is concerning, but it's not a great timing indicator. So I wouldn't be arguing with the market here. It's just not giving you any reason to. We look at the interest rate on the 10-year Treasury. This goes back. This gives us 10 years look at the rate of the Treasury, and it just has continued to stay right in that 4% range, 4.5% range for a 10-year U.S. interest rate for just years, and it's right there. So interest rates aren't really moving anywhere either, which might make the stock market finally relent or calm down a bit, but it's not happening. This is the concerning one, and I point this out all the time. This would be 4681 here. This would be 20 times earnings on the S&P 500, which is a long-term normal value, 20 times earnings. As you can see here, it's nearly double what that number is. So the market is very, very overvalued. But again, and that's something people say, okay, that happened during the dot-com boom, similar sort of thing. And yes, that's true, but the market was overvalued for a couple of years before the NASDAQ finally relented and began to go down. So it's not a great timing indicator, but it's just something that people should have in the back of their heads that the market is very overvalued. So if those magnificent seven stocks, the Googles, the Facebooks, the Nvidias, if they ever did go the other way, it could get ugly, but it's not happening yet. So just something to watch for. We go to economic indicators is for the U.S. The GDP growth rate. Last reading was 1.6. The or annualized growth rate 2.7 there. That's pretty good, actually, doing just fine. Non-farm payrolls, these are all over $100,000 for 100,000 for the job numbers. That's good. Inflation is ticking up 3.8. Anybody who goes shopping knows that too. But it's not outrageous. It's not 6 or something like that. But it's still up there. And then come down to usually they have retail sales in here. I'm just missing it. So we got zero point 0.5. It's not great, but still positive. So these are fine too. I'm not seeing anything that's really concerning. So basically, if you come back here to the big picture, it is just still up and away. Market's not telling us to calm down just yet. I mean, obviously the weekly chart here, it's gotten quite a bit away from its trend line, but overall, long-term money, just let it go, let it do its thing. It's not the markets are not telling us as of yet that we have something to be concerned with. So, other than how expensive it is, but we'll see. Someday that'll rewind, but who knows? I might be retired by the time that happens. So, anyway, hope this was helpful and informative. I'm going to put up our contact information here. If you have any questions or you'd like to hear more about what we're doing in our portfolios for our clients, please don't hesitate to reach out. Otherwise, we'll see you at the next update. And thanks so much for watching. Take care.